Are you one of the millions of people who've jumped into the gig economy? Maybe you're driving for a delivery app, freelancing your skills, or turning a passion project into a real side hustle. If that's you, then you absolutely have to understand that the tax game is played differently now. And trust me, knowing the rules is the first step to winning.
I mean, the appeal is obvious, right? You get total freedom, you're your own boss, you can work whenever and wherever you want. It doesn't matter if you're a student, a creative pro, or just building something on the side. That independence feels incredible. But, and it's a big but, it comes with a whole new set of responsibilities that can sneak up on you, and fast.
And this leads us to the one question that sends a chill down the spine of pretty much every new freelancer. You've had a great year, right? Money's been flowing straight into your bank account, you feel like you're absolutely crushing it, and then tax season hits.
And there it is, that gut punch moment in April when you finish your tax return and you see a number so big, you're convinced it has to be a typo. It's like a painful rite of passage for so many gig workers, but here's the thing, it absolutely does not have to be that way for you.
Look, if this has happened to you, know that you are not alone, not by a long shot. More than a third of the entire US workforce is freelancing in some way. And the source material we're digging into is crystal clear about this. The single biggest mistake, the one that causes all that panic, is just not setting aside money for taxes as you earn it.
So to avoid that trap, you have to understand this fundamental fork in the road for how you get paid. It really all comes down to this. Are you on the W-2 path or are you on the 1099 path? This slide really lays out the entire game. On the left, you've got your W-2 employee, where things are pretty much done for you. But look over on the right at the 1099 contractor. All of a sudden, withholding taxes? That's your job now. And that FICA tax? Notice that little shift from split 50-50 to you pay 100%? That's a huge deal.
So let's quickly touch on the path most of us are familiar with, the W-2. In any traditional job, your employer does the heavy lifting. They figure out and pay your federal, state, and payroll taxes directly to the government from each paycheck. It's pretty much a set-it-and-forget-it system.
But when you're a 1099 worker, everything changes. The client pays you the full, gross amount you asked for. Not a single penny has been held back for taxes. And why is that? Because you're not an employee anymore. You are the business. You're in the driver's seat, which feels amazing, but it also means you're the one holding the map.
And this new role as the business leads directly to the biggest financial shock for new gig workers. It's called the self-employment tax, and honestly, it's a trap that is way too easy to fall into. Okay, so in a regular W-2 job, you pay FICA taxes, for Social Security and Medicare. You see it come out on your pay stub, but what you see is literally only half the story.
You, the employee, pay 7.65%. That's the part you're used to seeing deducted from your check. Simple enough.
But at the same time, your employer pays a matching 7.65% on your behalf. This is the hidden half you never even see, but it's a real cost your employer is covering for you.
And here's where the trap springs. As a 1099 contractor, you are both the employee and the employer, which means you are on the hook for both halves, the full 15.3%. It is literally double the rate you were used to paying, and it is a massive, massive hit if you're not ready for it.
And it's no wonder the research highlights this exact point. This doubling of the payroll tax is almost always the single biggest shock for people new to the gig economy. It's the thing that can turn what you thought was a profitable year into a total tax nightmare.
And the fun doesn't stop there. The IRS doesn't want to wait until next April to get their money. If you're going to owe more than $1,000 in taxes for the year, you are required to pay estimated taxes in 4 quarterly payments. If you fall behind, you can get hit with penalties. Okay, I know that was a heavy dose of reality, but here comes the good news. Now that you are the business, you unlock this incredibly powerful tool to fight back and legally shrink that tax bill. You get your new secret weapon, business deductions. So here's the concept you absolutely have to burn into your brain. You don't pay tax on every single dollar you earn. You only pay tax on your net income. And the formula couldn't be simpler. It's your total earnings minus all the legitimate expenses you had to pay to run your business. So what counts as an expense? Well, if you're a delivery driver, it's the cost of using your car. You can deduct a standard amount for every mile you drive. It's also part of your cell phone bill and any gear like delivery bags you buy. If you're a freelance designer, it could be your laptop, the software you subscribe to, and even a portion of your rent if you have a dedicated home office.
I really want this to sink in.
Every single dollar you can legitimately write off as a business expense is a dollar that becomes tax-free. This is why keeping good records, using an app to track your miles, saving receipts, isn't just nerdy bookkeeping. It is actively saving you money. It's putting cash back in your pocket.
So, we've seen the trap and we've found our weapon to fight back. How do we pull it all together into a simple, repeatable system? Well, it all comes down to a clear 3-step action plan that keeps you in complete control. Okay, here it is, the whole strategy. Step 1, open a separate savings account just for taxes. The second a payment from a client hits your main account, transfer 25 to 35% of it straight into that tax account. Don't even think of it as your money. Step 2, get obsessed with tracking. Use an app, scan every receipt. The better your records, the lower your tax bill. It's that direct. And step 3, pay the IRS quarterly. It takes 5 minutes on their website and it keeps you from digging a hole you can't get out of.
And that's really it. Following this simple discipline is what separates the freelancer who's panicking in April from the confident business owner. You get rid of the guesswork and the dread, and you replace it with a system that gives you total clarity and control. You actually turn that tax anxiety into financial confidence.
So we'll end on this. You did the hard work to earn that money. The real question is, have you built the system to keep as much of it as you legally and rightfully deserve? Now you have the blueprint.